Good morning, everybody. This is the live market open for Wednesday, November 2nd. I'm Yohay, Elam of Forex Crunch, doing the show as usual for FX Street. I hope everybody is doing well. Today, as usual, we'll cover recent developments in markets, and that will, of course, we'll talk about the fall of the US dollar and explain what's going on there. Of course, we'll cover upcoming events as we usually do, discuss charts and levels, the majors, the minors, the crosses, everything. Preview the Bank of England's rate decision that comes tomorrow in the afternoon. And then, of course, the non-farm payrolls preview. Of course, goes without saying, the biggest event on the market's mind is the elections, the US elections, which are already stirring up markets. And of course, we'll finish with the next 7 days. The preview, the week ahead, the week of the US elections. And of course, wrap up the show. So very busy show, but as usual, your questions are more than welcome. In case you cannot see the chat box alongside the video, please go to the address here, tlk.io/FX Street-Forex-Live-Video. Okay, that was a long introduction. What's going on in markets? What's going on in markets is basically the dollar is down, okay, downed by Donald, not exactly by Donald Trump, but because of the elections. In case you've been living on another planet and you haven't heard, on Friday afternoon we had the FBI reveal that they're reopening the investigation regarding Hillary Clinton's emails. Details are unclear, seems to be more smoke than fire. It doesn't matter. Trump was already narrowing the gap, and with this news, he has a better chance to win the elections. Now, that is spooking off markets. We've seen, and the US dollar, we've seen the dollar fall on Friday, recover somewhat on Monday, but the pressure continues as new polls come out. One of them yesterday showed an advantage for Trump, the ABC poll. Others, are more or less mixed. It's clear that the gap has narrowed, but Clinton is still a favorite, okay? But there's lots of tension, of course. So that's the main story. I think we're less than a week before the election, so it makes sense that markets are worried about that. Well, as I mentioned, we'll do a special segment about that, but that's really the big story. Okay, but in markets, there are also other stories. There was also tension regarding the OPEC, non-OPEC deal. Back in September, various countries talked about cutting production, curbing production. Saudi Arabia basically, some would say gave up, threw the towel, allowed for a cutting of production to Iran. Since then, there were talks that Russia would be on board as well, a non-OPEC member. And so far, since then, we've seen issues. Every country wants an exemption. That includes Iraq, Libya, you name it. So it's unclear if there will be any OPEC agreement. The big summit is at the end of the month. And in Vienna, 2 years ago, the summit produced no agreement, and then oil prices collapsed. Will they collapse once again? No, but they'll probably suffer unless there is an agreement, and then they'll rise. But currently, what we're seeing is that sort of a lower chance of cutting production. In fact, countries are pumping more, and this pushes down oil prices. That serves to support the US dollar, but not as much as it did back in September. Okay, let's continue with what else is going on. Of course, tension regarding the Fed, the non-farm payrolls. Today we have the Fed decision, almost a non-event. We'll preview that, of course, but in short, it's not such a big event because the big event is in December and they will not do anything before the elections. And of course, on Friday, we have the non-farm payrolls. As usual on Friday, it has also political implications, not only implications for the Fed, because it's just 4 days before the elections. In other news related to the BOE, Mark Carney, the Canadian governor of the Bank of England, announced he'll stay in the Bank of England for another year until 2019. He'll see Brexit through, okay? He was expected to end his term in 2018, A full 8-year term would have ended in 2021. Anyway, he went for the middle road, and markets like him. So that's a positive for the pound. And we had the Australian rate decision yesterday. Also, this helped the Australian dollar. They decided not to change rates. That was totally expected. And they seemed in no rush to cut rates once again. They did that this year already twice, in August and in May. So all in all, that was positive for the Aussie. Okay, any questions? Well, yeah. Okay, let's continue with the data we had so far. Lots of data. Yesterday we had the US ISM manufacturing PMI that came out at 51.9, a bit better than expected, did not move the needle too much. Again, markets are beginning to focus more and more on the elections. And it wasn't also a game changer for the non-farm payrolls, did really shift expectations. On Friday, before this FBI effect, GDP came out at 2.9%, better than expected. Finally, some strong growth from the United States, but internals were not so good. Consumption was weak, and as you know, as anybody that has been to the United States knows, it's all about consumption, and that's the motor of the locomotive of the economy. And also there was a rise in inventories, and when inventories are replenished in one quarter, they are depleted in the next one. So it's sort of a seesaw, not the kind of growth you want to see. So there were some doubts cast at this report. Beforehand, we had the US durable goods orders. They came out mixed. The core was expected, but the core ex-defense, ex-air came out at a drop of 1.2%, and that was bad news, of course. US new home sales were 593,000, and I didn't fill here the slide, but the Fed's favorite inflation figure came out on Monday at 1.7%. No surprise over there. Year over year, it does not change the picture for the Fed. All in all, the Fed is on course to raise rates in December, unless data really turns south, but the bar is relatively low. The low bar is a theme we'll be talking about also in the NFP preview. And unless, of course, Trump wins. They will never say that out loud, but that is a cause of worry. Other data from other places in the world. It's not only about the USA. Eurozone inflation remains disappointing. Yes, headline inflation went up from 0.4 to 0.5, thanks to the diminishing base effect, okay, of oil prices, but the core inflation remains 0.8, very poor, shows that Draghi could add more QE, could add pressure on the euro. Also, GDP was mediocre as well, 0.3. That's the first estimate. We're still expecting data from Germany, so it may fluctuate, but anyway, it is unconvincing. In the UK, totally different story, much stronger growth. In the quarter of Brexit, the economy grew by 0.5% or 2.3 year over year. What Brexit, so far at least in Q3, the quarter immediately after the vote, the economy did hold up quite well. And well, that'll be also a theme in tomorrow's rate decision by the Bank of England. They were under huge criticism. Some expected Carney to quit because of his role in warning about Brexit. Anyway, for now, the economy is okay, but there are real, genuine worries that things could deteriorate from here onwards. In Canada, the GDP came out as expected, no surprises. In Japan, also here, inflation remains poor, only 0.2%, according to the measure of the Bank of Japan. So even in their own measures, they're not reaching their goals of 2%. Also here, there are rumors that Kuroda might quit. He came into office 3.5 years ago, promised to reach 2% inflation in 2 years. That never happened. Chinese PMIs came out better than expected. Very encouraging for Australia, very encouraging for the rest of the world. They came out at that was 51.2 on the Caixin manufacturing PMI. New Zealand employment also came out better than expected, following the unemployment rate, and the milk came out better than expected as well. Milk prices rose. Anyway, we have better than in Australia and in New Zealand, we have some encouraging news. Okay, what's on our agenda today? We have, sorry. Well, 9:30 GMT. We have the construction PMI in the UK. Yesterday's manufacturing PMI came out a bit better than expected. It's a warm-up for the services PMI coming up tomorrow. But tomorrow we also have the BOE at the same time. So because of this super Thursday from the Bank of England, we have these PMIs will sort of be in the background. Much more importantly, we have the ADP non-farm payrolls at 12:15 GMT. This is a hint for the NFP. That's a big event. It doesn't always correlate quite well with the actual non-farm payrolls, but it always moves markets. Okay, 12:15 GMT. At 2:30, we have, as usual, the weekly oil inventories. Yeah, let's see if they move anything. It's more about politics, also in OPEC as well. And we have the Fed decision in right hour, but it's 6 p.m. GMT. Something to note, the United States and Canada have already moved their clocks. Sorry, the United States and Canada, it's still summertime, it's still daylight savings time. Here in Europe, we're already back to the sort of normal hours. So it's GMT is now London time, and Europe is 1 hour above GMT once again. So let's talk a bit about the Fed in this upcoming events. Also return to it later on. No changes expected before the elections. Okay, no forecasts, no press conference. This is a sort of one of those less important meetings. The Fed always tells us that all the meetings are live. Last time we had 3 dissenters. 3 hawkish dissenters, okay? That was Esther George, Rosengren, and Mester. This time, I guess as nothing has materially changed in the economy, I believe they will vote once again for a rate hike. The bigger question is, will they hint about December? Okay, once again, will they tell us that they're going to raise rates for sure in December? Okay, we do not know that for sure. But maybe they'll give us the clear hint. Okay, markets want more certainty, even though if a rate hike is not necessarily market friendly. Okay, so that's one of the big issues there. Will they get a hint? I believe there will be a big hint, not like the one we had in October last year. Okay, in October last year, they basically told us we're going to raise rates in December. This time, I think they're going to leave some wider open door. They'll probably have the NFP in front of their eyes, okay? But they might leave an open door in case things go wrong in the elections, or maybe other data will go wrong later on. But probably a big hint, but not a full commitment like last year. And there is one issue, well, maybe it's not that relevant anymore, given recent days. It's the strong US dollar. In the past, sometimes they have complained about the strong US dollar, but well, the US dollar has weakened a bit lately, so maybe it's not that important. I see a question here from Asfar. It says, you mentioned that Chinese data is encouraging for the Australian dollar, yet Aussie Japanese yen is crashing. Yeah, I would attribute that crash. We'll soon reach the charts, but I will attribute that crash to flows into the safe haven yen following opinion polls, more than a fall in the Australian dollar. But we'll look at the charts and examine your question very soon. Okay, so these are the upcoming events. We'll have a special preview for the bigger upcoming events, which are, of course, Bank of England and the non-farm payrolls. Unfortunately, this Fed decision is not that important, but let's repeat, no changes expected, no forecasts, no press conference. It's sort of a bridge decision between September, which was important, and December, which is expected to see a rate hike. Again, probably 3 dissenters, no big changes in the statement. Probably a closer hint about the hike, but no full commitment. Leaving the stage for the elections, leaving the stage for the non-farm payrolls, at least a few days before the elections. Okay. And now to the charts. We'll examine the charts, starting with the majors. This is the segment about technical levels, support and resistance for major pairs. We'll start from euro dollar, starting from the top. World's most popular currency pair made quite a move. So here we are at 110.67 at the moment. Still, as I see it, far away from the 111.20 line, which is strong resistance, because it served as the bottom level for the previous trading range. Let's zoom out just a bit and see how this 111.20 level separates ranges. Okay, so here we are making quite a bit of headway since the bottom. The bottom 108.50 is the line to watch. 109, 109.60, 110, of course, the round level. And here I could add lines between 110 and 111.20, but 111.20 is such a strong line that it deserves its own place. If we add lines to the top, we have this level here at 112, also round number, and much higher. We have this level right here. Okay, so these are the levels to watch: 112.80, 111, 112, but the current range is 110 to 111.20. Okay. Pound dollar also recovered, but there's lots more hesitation around here. So we're basically in a range. So this is the flash crash in October, where you can see here the pair fell to, well, depending on the broker, there were different levels. In my chart, it's just around 119. Anyway, it managed to bounce back, stabilize. Currently, levels to watch on the top side in pound dollar, 124.80. If we have some good news from the Bank of England, 123.20 is already the top of the current range, and 121 is the bottom of the current range. But basically, in the meantime, we're entrenched just above 121.70, and the pair finds it hard to reach 123. So basically, we're at the 122 level. Dollar yen. Look at the big collapse of dollar yen. When the dollar was surging, everything looked good. We managed, Japanese policymakers were happy to see it bounce from 100 all the way to 105.50, actually, just a few days ago. And these revelations from the FBI sent it lower, first to the 104 handle, and overnight we had another fall, currently at 103.89. 103.60 is the low for the day. I see support at 103.40. We can add another line of support here, but that would be weak. I would see strong support only at the 101 level, but maybe you can add this line. 102.75 is the next level after 103.40. So this is the big level right here, and 105.50 caps the pair to the top side in case we have good news for the dollar. Look at, jumped over a few currencies. Dollar CAD. Lots of moving parts recently with dollar CAD, US elections, OPEC rumors, oil prices, things like that, and of course domestic data. So the Bank of Canada has expressed worries that hurt the Canadian dollar. That's why we're seeing it trade higher. But other factors, GDP was okay, so doesn't collapse. Very strong resistance there at 134.60. Okay, this is a veteran line of support and resistance. 133.50. Works as support to the downside. Let me update the chart here. So that's the current range. We haven't reached 134.60, but that's the line that is looming above. Further below 133.50, we have 132.80. Also a veteran line. Look how it worked as a stepping stone on the way to the top side and beforehand as resistance. Further below 132.40 is weak. Weak support. 131.40 worked in both directions. Here we can see it working as support back in September, and 130.80, also a veteran line. Of course, the lowest line here to the downside is 130. Above 134.60, I would mention 136. Aussie dollar, yeah, as you can see, the Aussie is weakening now. Again, safe haven flows to the yen and against the Aussie, which is a risk currency. But all in all, the Australian dollar doesn't look that bad. Okay, so it's not a matter. The crash in Aussie yen is more related to the yen, as far as I can see. So we had a few moves to the top side. We can perhaps see here a downtrend channel. Okay, beginning from the top here at 77.40, a very strong line of resistance, and then we had a lower high here at 77. And then another one at just under 77. Anyway, I'm looking at 77.40, 77, 76.50, 76, and then 75.30 and 75. The Aussie dollar is beginning to copy euro dollar and beforehand the yen. I mean, the ranges have become much more narrow. Okay, last week's inflation figures were good. They sent it higher. But nothing really devastates the pair or sends it higher. Above 77.40, we have 78.40, but it hasn't been challenged quite yet. Kiwi dollar received some good news, so it's bucking the trend, so it's diverging away from the Aussie dollar, okay, because of the good employment figures, 72.30, so we're not seeing safe haven flows. So what's going on with the US elections has the biggest effect at the moment on dollar yen. Was always poised to be the most vulnerable currency. Kiwi is not yet affected, but if we have a Trump victory, I believe it can fall because of safe haven flows to other currencies. First the yen, then the dollar. Anyway, Kiwi dollar is moving up today. Very good news from New Zealand. As I mentioned, 71 is some kind of support. 72 70 is resistance. We had this line here. Above that, it's only 73.60 when the pair was moving to higher ground. Very perky. It isn't that strong anymore. Anyway, 73.60, 72, 65, 72, 71.60, which is not that strong anymore. 71, and of course the round number of 70. Okay, that's the Kiwi dollar. And we'll finish the majors with the dollar Swiss. Not my favorite currency pair. And Swiss franc, yeah, is not my favorite currency because of ongoing interventions by the Swiss National Bank, which has probably fallen asleep in recent days. But anyway, the pair currently reflects the weakness of the US dollar more than anything else. It reached parity and it was rejected from parity. As you can see, you can even paint a head and shoulders pattern here. Some kind of support at 99, 98.50, 98.20 is a very, very strong line. Moving to the downside, we have 97 and 96.50. Big fall there in dollar Swiss. When I say lines of support and resistance in dollar Swiss, I mean, yeah, well, you can see the lines on the chart, but remember that the Swiss National Bank, if it intervenes, can break all the lines. Okay. Let's see if there are any questions. Okay. Thank you, Asfar, for your question. So that completes our segment for the majors. Okay. And now we'll talk about the crosses. Okay. The other currency charts, ones left behind, if you wish. But some are favorites of traders. So we'll begin from the Swiss franc once again. Euro Swiss has been falling, moving out of its normal ranges. It has days where it trades only in a range of 20 pips or so. So it has fallen. It seems that the Swiss National Bank is asleep, allowing safe haven flows to go into the franc. Usually, we're currently reaching their sort of line in the sand. I expect some kind of intervention at these levels. It's hard to trade against markets, okay? But as you can see, 107.60 is not a level that the pair visits too much. When it did fall back in June over Brexit, it fell to even much lower ground, but quickly moved higher, probably an intervention. At the time, Thomas Jordan, I should say, the governor of the SNB, refused to say if they intervened or not. They probably did. Anyway, we're used to different ranges. We're used to around the 108, 109, maybe 110 even. I assume they'll intervene soon. They don't have strict policy. It's always hard to predict what they'll do, but I'm sure they're at the edge of their chairs at the moment. Anyway, I would say 108.25 is a level to watch, 108.50, 109, 110. Basically, we've been in the 108 to 110 level, and we're surprised to see that they allowed it to fall so far. Maybe they don't want to work against market trends. As I speak, it's falling even to lower ground, 107.54. I would not be surprised to see an intervention, but perhaps they'll intervene once markets are looking in the other direction, okay? When it's easier to intervene, not going immediately against the trend. Another cross here is Euro Pound. As we've seen, the Euro has been moving quite nicely against the US dollar, but against the pound, it's a bit, the pound isn't, the US dollar is stable against the pound. This means that Euro Pound is moving to the upside. High so far has been 47, 90, 50, I would say, is the high level to watch at the moment. But of course, the round number of 90, despite being broken, is still important. A few more lines to add here is 89.50, and to the downside, much lower, right here at 88 round number. Euro Pound, of course, shot higher after Brexit. Of course, Brexit is also bad for Europe, but worse for the UK. So that's the shooting higher. It has continued moving higher. These are the levels to watch: 91.50, 90.50, 90, 89.50, 88, and much lower, 87.70. Okay, if we take another line to the upside in case things really go sour tomorrow with the Bank of England, 91.50 is another level to watch. Euro yen currently 114.85, falling today because of the safe haven flows to the yen. 115.80 is resistance, 116.50 is the next line, support 114.50, 113.80, and 112.80 to the downside. Very nice moves here in Euro yen. I know many traders prefer pound yen over Euro yen, but technically speaking, there are lots of pips here, and it moves in a relatively well-behaved manner, let's put it this way. Pound yen, quite a big fall, of course, after Brexit. Safe haven flows to the yen. Currently, we're trading in a very, very well-defined range between 125 and 129. Okay, so it's 400 pips here on pound yen on the dragon, and it's very well separated with the next range. Next line of resistance is 132.50, followed by 137. Of course, we could fall to 120 if things go wrong in the US elections. The yen attracts safe haven flows, and the pound has its own issues. So it's sort of the extremes in pound yen. Oh, it has always been so. There's a reason they call it the dragon, or, well, the dragon. Another name is the gepi, but the dragon is more suitable. Look at these amazing ranges here. We were at 175 early in the year, currently at 127. You don't get that on your everyday currency pair. And to top off our conversation about the crosses, we'll add something else that we usually do. Oil prices, WTI crude oil, once again challenged the highs. You can see a very clear double top there at 51.80. But when there was hope for a real deal, there's still hope. Who knows? Anyway, currently we're back down to 46.20. 42.50 is very strong support. Look how it worked in separating ranges early in the year, and also worked as support just now in September. So very clear lines there in oil. 39 was the low level seen in August, another level of support. Very wild ranges. We can add more lines here, but volatility is quite high. Look for that 52 level. We might see false breaks, but I doubt my tendency is a bit bearish on this pair. Anyway, from current levels, I see real support only at 42.50, and that's another $4 to go. So that's quite a big. It's another 10% or so. Yeah. So 49 might be another level of resistance. Yeah. So that's WTI crude oil for you, completing our roundup of crosses, and we added oil to that. See another question here from Asfar. He says, interest rates on the yen are negative, and the data coming out of Japan is also not that great. Then how come traders consider the yen as a safe haven currency? Dollar yen longs would generate an income because of interest rate differentials. Your views? Okay, so in theory, well, you have very good points. The thing is, first of all, also the dollar is a safe haven currency. Okay, the US dollar is also sought in times of trouble, but it's second fiddle, it's second tier. Yen is number one. Why is the yen number one? First of all, historically, they've always had low interest rates. So people are used to the yen as a safe haven. Money is lent in Japanese yen in huge amounts and goes to riskier assets elsewhere. It can be in Australia, New Zealand, the famous carry trade, in China, you name it. Also in the US. So the yen is still the ultimate safe haven. Maybe not safe haven, but what we're seeing in times of trouble is repatriation. The money goes back to Japan. Money lent cheaply in Japanese yen goes back to Japan. So this kind of carry trade is problematic. And there is an interest rate differential, but it's not that big. Okay, the United States, the Fed raised interest rates from a range of 0 to 0.25, okay, to 0.25 to 0.50. It's still very low. It's not the carry trade that we had in the past. So it's more about speculation. Okay. I hope this answers the question. And let's continue with our next segment. Very busy show today, lots of things to talk about, as you can easily see. So, next segment is upcoming events that we have later this week. We'll have special previews for the main events, but let's tomorrow we'll have the Fed aftermath again. No rate hike is expected. Let's see how big a hint they give us about December. We'll have reactions. Usually there are three main reactions to the Fed. We have the immediate reaction, that's at 6 GMT. The Tokyo Open reaction, well, while we here at Europe are asleep, and another reaction in the European morning. After that, we have at 9:30 GMT, the UK Services PMI. At 12, we have Super Thursday, the Bank of England's rate decision. We'll preview that very soon. We have the regular weekly jobless claims in the US, and this time we also have labor unit costs, a second-year figure out of the US. At 2 GMT, we have the ISM non-manufacturing PMI, the services sector report, another very big hint towards the non-farm payrolls, more important than the manufacturing one, and in my opinion, more important than ADP. Anyway, it'll give us sort of a last fine-tuning of expectations for the NFP. And we also have factory orders, which will probably be ignored because of the services report. On Friday, we have, for those of you awake at night, we have the Australian retail sales and a report by the Reserve Bank of Australia. But the biggest event, of course, in the European morning or European afternoon, US morning, the non-farm payrolls. Again, a preview is coming up. We have also the Canadian jobs report at the same time. Both countries also release their trade balance numbers. So it'll be lots of fun trading dollar CAD. Just kidding, stay away, that pair could be very, very volatile. And to top it off, we have a speech by Fisher. Will we have another surprise late on Friday? Who knows? Anyway, Fisher is number 2 at the Fed, the vice chair, and his words could move markets. So just another thing. Of course, the NFP is the most important event on Friday. So now, let's see if we have more questions. If not, we'll begin with, yeah. Okay, so this is the preview for the Bank of England. Carney marked in. Carney is staying until 2019. That overshadowed the decision so far this week, but tomorrow is the big day. Super Thursday. Why is it called Super Thursday? Because we have a rate decision, meeting minutes, and the quarterly inflation report. We have BOE meetings every 6 weeks, but only every second meeting we have the quarterly inflation report. Like the Fed, there are more important meetings and less important ones. This one is more important. So back in August, when the Bank of England announced the comprehensive package, they cut interest rates from 0.5 to 0.25, added more QE, added a few more programs, and they gave us heavy hints that in November, in their next inflation report, they're going to cut rates once again, probably from 0.25 to 0.10. But since then, the pound fell even more. Remember, back in August, the pound was trading at about 133, 134. Now it's at 122. I mean, I'm talking about pound dollar. Of course, weaker also against the euro, weaker against the yen, weaker against everybody. And since then, this weakness is also reflected in inflation. Everything the UK imports costs more. Okay, so we've heard from Carney that he's not indifferent to the exchange rate. And the exchange rate is not a target, but they are not indifferent. And when they see inflation rising, they're not. There is no urge, no rush to cut rates, no rush to add more to demand, no rush to weaken the pound. Okay, so no change is expected tomorrow. But of course, it's not only about the moves; it's also about the talk. They always publish this inflation fan chart, a projection of a range of inflation in the future. It's important to see if they moved it up because of Brexit, because of the weaker pound, or not. The more important question is, when will they act? Okay, so if not now, when will they act? They'll probably not give us too many details. Okay. We'll see the response to the post-Brexit strong economy. GDP came out better than expected. Other figures look good. It's also political maneuvering over there. Will they say, okay, we're surprised by the rise of the economy now is thanks to the exchange rate that helps exports? Or will they say, okay, that's just temporary, things are going to get worse? Another question that we're going to ask ourselves tomorrow, are there any dissenters? Are there members of the Bank of England that wanted another rate cut this time? This could hurt the pound. Of course, a unanimous decision is expected. Okay, what can we expect for the pound? If there's a long horizon for cuts, okay, inflation is higher, the pound is weak, we're not going to cut rates anytime soon. We could maybe see the pound bounce back up. Okay, maybe a dead cat bounce in the bigger scheme of things, but we could still see it bounce. If they express worries about the hard Brexit, then we could see the pound weakened. We can see more expectations for a rate cut and a further fall to the lower levels. Has the pound bottomed out? That's a question that is an open question for me. It depends a lot on what happens tomorrow. Let's just take another look at this chart to complete our segment about the British pound. In the bigger scheme of things, currently we're at the 122.50 level, very much entrenched in range. Level of resistance here that I see, is at 123.20. Let's zoom out just a bit to see that level. Okay, we've seen that last week, 2 weeks ago, and support 121.70, further support 121, and of course the round number of 120. To the top side, we have above 123.20, we have 124.50, and above that, it's pre-flash crash levels. Okay, so it's not, maybe 127.90, the initial post-Brexit low, is worth mentioning. I believe that they will not help the pound too much. Okay, maybe a bit, but I don't see a big move. Okay, that's our preview for the Bank of England. Super Thursday, November 3rd. And now to the preview for the non-farm payrolls. Non-farm payrolls, they only need to be good enough, okay? Good enough, the bar is low. So it's the last report before the elections. Last time Trump, I mean, in the last debate, the Republican nominee said that the previous report was terrible, a disaster. He was totally wrong, as he likes to say. It showed a gain of 156,000 jobs, which is okay. Wages 2.6% year over year, well within range. The unemployment rate did go up from 4.9 to 5%, and that has political implications. But for markets, if this rise was accompanied by a rise in the participation rate, which was exactly what happened, it's not bad news at all. More people are joining the workforce. For a Fed hike, for the Fed to raise rates, we only need about 150,000. That should be good enough, because as the US nears full employment, the gain in wages will be smaller and smaller, but there should be more pressure on wages. Again, wages were around 2% for a very long time. They did move up to 2.5. They reached a peak of 2.7. I would say that 2.5%, a bit lower than last month, will be good enough for the Fed to raise rates. What's expected? Our market expectations stand at a gain of 175,000 jobs. Of course, we have ADP today, ISM non-manufacturing tomorrow. Things might change just a bit, but they usually don't change that much. These events usually have their independent impact on markets. Wages are expected to rise 0.3% year over year and to remain at about 0.3 month over month, 2.6 year over year. The unemployment rate is expected to tick back down to 4.9. Again, it's more important for politics. Markets aren't detached from politics, but if markets don't listen to politics, no change in the unemployment rate will not make a difference. More importantly, the focus is on jobs gained and wages. What's the expected reaction in markets? Because the focus is on the elections, we would need much bigger surprises to move markets, okay? So I would say that even 100,000 or more this month is good enough for the US dollar to say, okay, not a good report, but never mind, let's focus, let's obsess on the next opinion poll. Okay, remember, it's released Friday, 4 days before the elections. And last Friday, we had a big surprise. So markets will be on edge towards the elections. If we have 300,000 or more, that's already great news. That's already independent of the elections for markets, and that will be a big boost for the US dollar. Under the 100,000, of course, it's bad news for the dollar. It also has political implications, and so that will weaken the dollar significantly. Wages will come secondary. This time, in some months, we had wages sort of being the most important event, while headline number was a bit behind. This time the headline is the headline, and that's it. And unless they come out at a really big surprise under 2.2%, which is bad, of course, or under above 3%, which will be a huge positive surprise. So we need really big surprises to move the US dollar. Okay, that completes our segment about non-farm payrolls. I see no questions, so let's move quickly to the main dish, perhaps, or I've been talking so much about the elections. Let's talk now only about the elections. Here are Donald Trump and Hillary Clinton in happier days in Donald Trump's wedding with Melania in 2005 with Bill Clinton as well. They're not so happy anymore together. So let's talk a bit about what happened on Friday. This is James Comey, the head of the FBI, currently under scrutiny. It was the big October surprise. The mention that Clinton, there might be another investigation about emails, about Clinton, even though the details were not that serious, that triggers a fall in the polls for Clinton, a rise in the polls for Donald Trump. Markets reacted on Friday. It was later reversed, okay, because it was unclear if there is fire behind the smoke. It's unclear if we have real news there. Maybe there's nothing in the emails. Comey sent this letter to Congress about the emails without having any data about what's in those emails, okay? There's also talk about a counter October surprise. If the FBI has something on Trump's relations with Russian President Vladimir Putin, or perhaps if the Clinton camp has some kind of opposition case, some kind of big bomb. So lots of rumors. Millions have already voted. Last time I looked, 25 million Americans have already voted, and the others, most of them have decided. But of course, if it does move something in the margins and the race is close, it can make a big difference. Yesterday's ABC poll that showed Trump in the lead, the tracking poll, the same poll was showed Clinton in the lead 12 points just 2 weeks ago. Of course, that moved markets. Of course, a poll that moves 13 points is a bit too volatile, but you never know. Again, a reminder of Clinton and Trump and markets. Markets usually prefer pro-trade, pro-market Republicans, not Democrats, not left-leaning Democrats. But this time, well, Clinton is not really left-leaning. She's very mainstream, very well-known, very certain, unliked as well, but not, not for markets, not something that is perceived as dangerous. Trump is perceived as a wild card, anti-trade, very unstable, very impulsive. A Clinton victory is mostly priced in. Okay, last week it was much more priced in. Now there are much more worries. A Trump victory, even though he's gaining ground in polls, is Brexit times 5. Some brokers are already getting ready. I have a page on Forex Crunch dedicated to the preparation of Forex brokers for the elections, changing some margin requirements, leverage, things like that. U.S. elections and markets. Well, we've seen the U.S. dollar move more or less in a straight line on Friday, weakening against other currencies when this news came out. But now we're seeing it move more strongly against the yen. Okay, so we're seeing a risk-off reaction. And here's Donald Trump with Janet Yellen. I don't think this is a genuine picture. They just put both faces together. Anyway, if Trump wins, I don't see any case for rate hike because of the huge uncertainty and the dollar to weaken. If Clinton wins, we could probably expect them to hike rates in December. And what currencies will move most? Again, markets are on high alert. There's little time left today. We're recording the show. Having the show 6 days before the elections. Okay. Dollar yen, again, the yen could gain on Trump because of safe haven currencies. The ones, also the Russian ruble because of Trump's fondness of Putin could gain. The big losers could be those related to trade. First and foremost, Mexico. Trump promised to build a wall on the Mexican border and that Mexico would pay for it. I don't see that happening, but of course, any severance in trade relations is bad for Mexico and also for Canada. I would say the safe haven yen is the most volatile and the most straightforward currency. If you're trading the elections, which is of course very risky, the dollar will strengthen with Clinton against the yen and will weaken against the dollar and against the yen on Trump. Risk currencies such as the Aussie, the Kiwi, the CAD, they could take the opposite direction, but so far it's a bit more mixed. Okay. So that's our U.S. elections update. I'll take the opportunity also to invite you. We have on Monday a special show before the elections, and on Wednesday the aftermath of the elections. Okay, so that's our U.S. elections update. Again, recorded on November 2nd, 6 days before the elections. The news flow is huge. Let me show you if we're talking about the elections. I'm using this. I'm not the only one. Let's refresh it. The 538 elections podcast. Okay. Well, I'm listening to the podcast as well. This is their forecast. Who will win the presidency? Chances are 71% according to Nate Silver's 538 for Clinton, nearly 30% for Trump. Okay, these are the states. That's the difference currently. Almost 4% lead in the popular vote for Clinton. So despite the headlines, she's still in the lead. Here's how things have changed. As you can see, each time it's quite a seesaw. Clinton has a big lead, then it's squeezed back down to almost a draw. Now we're seeing the gap narrowing. Again, it began before the FBI revelations. So as you can see, the gap is narrowing, higher chances for Trump. And I also like to, well, if you're a political junkie, you could also look at this. So currently, North Carolina, Florida, and Nevada are leaning very, very lightly towards the Democrats, but they're almost toss-up states. Colorado is already a safer bet, but basically nothing is safe. Anyway, you can see the chances of Clinton winning falling and Trump winning rising, okay? So I like to follow that. Usually, well, it's updated during the US hours, not during the US night, which is now the European morning. Okay, let's move to preview for next week's events. Well, you can guess what's the next the big event, of course, the elections. Monday, special show. Follow FX Street for the full details. On Tuesday, it's election day. Rumors will fly throughout the day about turnout. Who is voting? Are more African Americans voting or less? What about Hispanics? Which in the swing states, it's going to be quite volatile, quite messy. Initial results are expected at midnight GMT, the night between Tuesday and Wednesday, of course. I think a few states in the east side, like Virginia, report, but and lots more results at 1 GMT. If the race is tight, it's going to be a very, very long night. Remember that Trump also alleged that elections could be rigged. That means that if the elections are close, they will be contested, maybe a rerun of the year 2000, who knows. On Wednesday, we'll have the US elections aftermath. We also have a rate decision in New Zealand at 8 GMT on Wednesday. Thursday, more aftermath. And we also have the US jobless claims. And on Friday, basically, this shouldn't be here. Sorry. We have bank holiday on Friday. It's Remembrance Day in many countries, and even more elections aftermath. But we also have the US consumer confidence, perhaps the first meaningful US release after the elections. Now, I didn't mention other events, not only because the elections are very important, but because there really aren't that many events. This week, what we're talking now is much busier with top-tier figures, with the build-up to the NFP. Anyway, next week is almost only about the US elections. Okay. Okay, no questions. So I guess it's time for the wrap-up. Very long show today, lots of things to talk about. Remember, everything will also be available for a rerun and as separate video clips. So this is the wrap-up for the live market open for November 2nd. It's a Wednesday, 6 days before the US elections. The dollar is downed by Donald Trump, the higher chances of Trump winning the elections, but Clinton is still in the lead. Tension towards also the OPEC meeting, pushing oil prices lower. And of course, we have the Fed tonight and the non-farm payrolls on Friday. Bigger event, perhaps, well, not for the US dollar, but this week, I think the main event is Carney, the Bank of England Super Thursday. It's expected to leave rates unchanged because the exchange rate is lower. The big question is, will they push? Are they still very worried, and will they cut interest rates? That could be bad for the pound. Or will they pause for now and lift the pound? In terms of upcoming events for today, we have the Fed decision at 6 GMT. I invite you all to join our live coverage. We'll be talking about, we'll be covering the event. No changes expected over there. We have the ADP non-farm payrolls as a hint for the non-farm payrolls on Friday. The Fed, again, no changes, maybe 3 hawkish dissenters. The same ones could repeat themselves. The big question is a hint about December. Will they make a big commitment? So like in December, that could strengthen the dollar, or no commitment, probably no full commitment, but a big hint somewhere in the middle, because they want to wait for more data, and they won't tell us that also for the elections. Are they worried about the US dollar? That's another question. So all in all, I expect the Fed not to rock the boat, to hardly change the statement, because not much has changed regarding US figures. still, the US economy is still moving forward. Not at an impressive pace, but good enough for now. So that's the Fed, the big event for today. Other things to notice, of course, tomorrow the Bank of England, and another big hint tomorrow for the NFP, the ISO non-manufacturing PMI, the services sector, and on Friday, of course, we have the NFP. Okay, a quick look at the charts. We have the US dollar weakening once again. Euro dollar moving higher. Levels to watch: 110 to 111.20. Pound dollar currently at 122.70. Resistance 123.20. Support 121.70. Dollar yen falling quite a bit. Support there at 103.40 and 102.80. Higher resistance 104.60. Dollar CAD currently 133.74, 134.60, and 133.50 are levels to watch. Aussie dollar 76.35. At the moment, 77 is strong resistance, followed by even stronger resistance at 77.40. Support 76 and 75 are sort of the big levels. Kiwi dollar had great news from over there. 70 to 65 is the level to watch. On the top side, 72, 71.60, and 71 are on the downside. All in all, a weaker dollar, but it's not across the board. Okay, the Aussie is showing some weakness, and yeah, and the biggest move is against the yen. The dollar is weakening most against the yen. Just one thing in this wrap up to show you the chances for rate hike. As close as I did back earlier in the year, but still around 25%, 26% chance for no change, and so that means 75% chance for rate hike in December. Okay, so that's a wrap up for today. Thank you very much for coming. I wish everybody a safe and successful day in markets. Again, I talked a lot about the US elections. This is a big event, huge event. We're in the final stretch, very ugly campaign, but it certainly moves markets, and you should be aware of the polls more than anything else. Join our live coverage of the Fed beginning before 6 GMT. And that's it for today. So thank you very much, everybody, and bye-bye.